We're going to interrupt our regularly scheduled programming to bring you my take on what's going on with this whole GameStop shenanigan. Hey, what's up guys? Welcome back to the channel. In this video, we're going to talk a little bit about the crazy that's going on in the stock market right now. We're going to talk something about GameStop. We're going to talk about shorts and what they are. And no, I'm not talking about these. And I'm going to explain it in a way that's actually going to make sense. Have you watched any videos so far that say that they're going to explain how shorts really work and they're supposed to explain it really simply, and you end up watching the video and it's still confusing? Or you're like, that wasn't any simpler to understand than the last video I watched. Well, I promise that I'm going to give you an example of how shorts work in this video that's going to make sense. My name is Paris Clough and this is Financial Self-Reliance. On this channel, we talk about the mindsets and the skill sets of the wealthy so that you can learn how to manage, protect, and grow your assets. If that sounds like the kind of channel and the kind of community you'd like to be a part of, go ahead and click like and subscribe so you don't miss any of the videos that I produce. All right, let's jump right in a little bit and find out what's going on in the marketplace. I had a totally different topic planned for this week, but with everything that's going on, I figured I might as well jump in. I tried to watch a few videos to get an understanding of what people were saying, what was going on, and I'm telling you, some of these videos were more confusing than they were before. I did find one though from Ben Shapiro that was really good, and I'll put a link in the description below that you can watch that one. But I'm going to make it even more simple to understand what shorts really are and how they work. But before I do that, I want to talk a little bit about what's going on. So let's get right to the bottom of where this all started. And it started in a subreddit called Wallstreetbets. I don't think I ever really heard of it before. This is all pretty new to me as well. When I got in and started reading some of the posts, it was like they had a whole other language. So if you're reading some of the posts in Wallstreetbets and you have no idea what in the world they're saying, don't feel bad. I didn't understand what they were saying in the beginning either. But after a while, you'll start to pick up on what they're talking about. So apparently in this subreddit, they decided to look at all the stocks that were being shorted on the market. And I'll get into what that means in a minute. And they decided that they were going to play Wall Street's game against them. And so far, it's working well. So basically what happened is this subreddit decided that they were going to pool together, band together, and they were going to go after the big hedge funds and see what they could do to stir the market. And they did just that. So let's take a look for a minute at what this subreddit has to offer. So as you scroll here, you see there's a lot of posting, a lot of activity on this thread, on this subreddit. Some really funny things, actually. As you go through this, you'll see some really funny things. But one of the things I wanted to talk about here was this. There's one Redditor, and his nickname isn't PG-13, so I'll give you the initials. It's DFV. So as you can see, DFV has 50,000 shares of GameStop. That's a lot of shares of GameStop. He also has 500 call options on the same stock. Between those two, you can see the total value of his account is $22 million. So you can see this guy's completely committed to the strategy. One of the neat things that I saw in this particular thread was a comparison to something that happened similar to this in 2008 with Volkswagen stocks. So as you can see, they're comparing last week to what happened in October of 2008 with Volkswagen, that there was a quick sharp incline and then it fell and then it shot way up. And so whenever you hear anybody talking about GameStop to the moon, that's what they're talking about. The rockets are this jump right here is what they're talking about, taking GameStop to the moon. Once you do that, you basically are able to sell at this super high price, and then it will crash down again and go back to a normal price. But in the meantime, you make a ton of money at that peak. So all the Redditors are saying, hold out until we get to the moon. And that's that peak that they're talking about. So if you bought shares of stock at 200 down here, and they shoot to just under 1,000, you 5x your money in just a few hours or maybe in a few days, depending on the time frame that this particular chart is talking about. This is what they're predicting to happen with the GameStop stock. GameStop stock. Try to say that real fast several times. So the next thing I want to share with you is this meme here. I'm going to leave a link to the subreddit in the description below so that you can go and check out a lot of this stuff yourself. But I really wanted you to hear this particular situation, what he's saying about how this is supposed to work. Basically what he's saying is the price doesn't matter. What matters is that at some point, the people who are holding these shorts are going to need to buy the stock back. And again, I'll share with you in a minute what that all means. But as they buy those stocks back, if somebody won't sell, they have to continue to offer that person a higher and higher price until they are willing to sell. And that's part of the reason why it's going to go to the moon, quote unquote, is because they're not going to sell until they have a price that's so high they're willing to sell it at that price. And that's going to be what causes these Wall Street guys and a lot of these hedge funds to really lose a lot of money, because they're going to have to pay a super high premium to be able to close out these options that they have, because they're on the hook if they don't. They have to buy the stocks at the price that the seller's willing to sell. That's why they're calling it a squeeze, is because the people that own the stocks now aren't going to sell until they get the absolute highest price they can from the highest bidder. One of the other problems that exacerbated this whole thing was that Robinhood, which is a finance app that people are using to buy and sell stocks, the average investor like you and I, we have to use these apps in order to buy and sell our stocks. The hedge fund managers, they have access to different things to be able to buy and sell their stocks. So when we want to buy or sell a stock, we have to use things like Robinhood and other apps that I'll share with you later, like Webull, which will give you 4 free stocks if you use the link below. And I would highly recommend using Webull because they didn't do this. So if you have a Robinhood account and you want to switch to a better broker dealer, try Webull and use my link in the description below, and you'll get 2 free stocks for opening an account, and then another 2 free stocks potentially, depending on when you're listening to this video, when you actually fund the account with $100 or more. So right now, because Robinhood shut down the app and didn't allow regular investors like you or I to trade the stock, and that's actually caused them to have a lot of problems, because now, as you can see, Robinhood is facing a lot of lawsuits right now. In fact, this one here says they have over 30 civil lawsuits that they're facing because they curbed trading. Technically, they're not allowed to do that. Come to find out from the CEO of Robinhood that they were under some guideline or restriction that they didn't have a big enough bond to cover all of the activity that was happening on this particular stock on their platform. And so they had to stop the trading so that they could gather enough money to get the bond to be able to support that. And they said that that was a ruling from the SEC. Either way, Robinhood is now facing several lawsuits, and who knows what the future will bring with what's going to happen with Robinhood. Here's some of that vernacular I was telling you about with this post. Diamond hands and tendies going to enter the congressional record. Diamond hands are people who don't sell easily. They're not persuaded easily. They can hold because they know what they're doing. Tendies, I'm not really sure what that means yet, but if you know what that means, put it in the comments below so that we can all learn together. But basically what's happening is that Congress is now wanting to have some kind of report on what's really happening, and they've asked this guy, the guy who I showed you earlier, that account with $22 million, that guy, here's his name right here, and that's why I used initials. Congress wants to interview him and get his side of the story. That's pretty awesome. That's pretty amazing. This is getting really big. So we'll see what ends up happening. That's the guy with the $22 million. So he's got a lot to lose or a lot to gain, depending on the outcome of this whole situation. All right, so as I shared with you before, I promised that I would explain shorts in a very simple way. So this is the easiest way for me to explain how shorts really work. Let's say that you and your friend are sitting on the couch, and your friend turns to you and says, "Hey bro, I want to borrow your TV for a minute." And then you ask, "Well, what do you want to borrow it for?" He says, "Look, your TV is going to decline in value in next month. And so I want to take your TV, I want to borrow it, and I'm going to sell it for $50 right now. And next month, when it declines in value for whatever reason, I'm going to buy it back for $20, and then I'll pocket the 30 and I'll give you your TV back." And the guy's like, "Okay, I guess." What happens in a typical situation is that he would be able to borrow the TV, sell it for $50, wait a month, buy it back for 20, and then give you your TV back, and he gets to pocket the $30, and maybe he'll split it with you and take you to lunch because he earned $30 on your TV. However, in this situation, what ended up happening was when he took your TV and he sold it for $50, somehow everybody knew and banded together so that he couldn't sell it for $20 a month later. Instead, everyone bought up all the TVs, making those TVs very hard to come by. And when things are hard to come by, that shoots the price way up. And so now, instead of being able to buy that TV back for $20 and make a profit, now that TV is selling for $200 or $300. He took and borrowed your TV and sold it for $50. He owes you a TV, and the TVs now are $200, $300, $400. Now he's gonna lose a lot of money because he owes you a TV back, and he has a certain time frame with which to give you your TV back. And so in order for him to be able to give you your TV back on time, he's got to now pay $200 or $300 to get that TV so he can give it back to you. And that's one of the easiest ways for me to explain what happened in this particular situation. GameStop was selling for $5. They thought it was going to go down. Everybody gathered together and said, "Let's get these guys." These guys on Reddit decided they were going to go buy up all the stocks possible, and that drove the price way up, almost $400 a share. And these guys who were expecting it to go down, they literally borrowed the shares from a broker dealer. They borrowed them from someone else. They went out and sold them, and now they don't have them anymore. They're hoping they're going to go down so they can buy them back at a lower price and keep the difference. That lower price didn't happen. They got to return those stocks within a certain time frame, and if they don't return those stocks within that time frame, they're going to be in big trouble, and they're going to have to buy them anyways, and they're going to have to pay a huge premium. That's why these guys are saying hold fast, because when the time comes, when these guys have to buy these stocks because the time's up, they have to give the stocks back, they're going to have to pay whatever price the market is demanding at the time that they have to give those stocks back. back, because if they don't give the stocks back within a certain time frame, now they can be pursued legally. And that's why a lot of things are happening right now, is because these hedge fund managers are basically stuck holding the bag, and the stocks are now exponentially more expensive than they were before. So I hope my example of you and your buddy on the couch, your buddy wants to borrow your TV, sell it for $50, hopes that it'll go down because price of the TV is going down over the next month, buys the TV back, splits the difference with you, and you still get your TV. So I hope that made sense to you. Once these hedge fund managers are required to return these stocks and they're gonna have to pay premium prices, we're gonna see what really happens. Guys, this is really crazy. Seriously, grab your popcorn, grab your soda, and sit back and let's watch the crazy happen. I hope you got a lot out of this video. I look forward to seeing you on the next one. Have a great day.